Platform is yours.
Thank you, Les, and it's a pleasure to be here. I see lots of familiar faces. I'd just like to start by saying that Community Capital Resources is a not-for-profit. We're not a bank, so we're not a competitor to banks and credit unions. We're in fact a friend, because we can work with the clients that you're unable to assist while you keep the relationship, both the friend relationship and the depository relationship. We, in a sense, support that business not only through the lending, but through a lot of technical assistance, so that after they've repaid a loan from us, hopefully their business is on a stronger footing, and then perhaps they might be considered by you to obtain a line of credit or a term loan as to help them grow further. So we're very happy to speak to banks and credit unions about how we might cross-refer people to one another and form partnerships to support businesses in our communities. We've been lending to small businesses since 2003, and we've been working in the Lower Hudson Valley for over 20 years. We started out working in lending to developers of workforce and affordable housing, primarily in Westchester County, and we now cover all the way to Sullivan County in the Lower and Mid-Hudson Valley. Because of that lending experience, we were approached to become what's called a micro-lender, so really working with businesses that are in the very early stages that banks are unable to assist, as Les said, with very good reason because of lack of experience, lack of collateral, lack of capital. And so the program has just grown from there. We are now a small business administration microlender, so we borrow capital from the Small Business Administration to Onward Lend. We also have been awarded $1.2 million in loan capital by Empire State Development Corporation's Small Business Revolving Loan Fund, so that again expands the capital we have available to support businesses in the Lower and Mid-Hudson Valley. These entities oversee us. We're not regulated like a bank is, but the Small Business Administration audits us every year. We are a community development financial institution, which is a U.S. Treasury Department designation. They provide us funds and a lot of oversight as well. So our sweet spot is $1,000 to $50,000. And again, that's not so attractive to banks because it's high touch and not very profitable lending. But for many businesses, that's just what they need to get started. We worked with a business in the green sector who had a $1,000 loan, attended one trade show, made some brochures, and landed a contract with United Nations Development Program, providing all their green cleaning supplies for them for 2 years. So $1,000 can really go quite a long way. We accept a broader range of FICO scores, alternative forms of collateral. We don't take positions on real estate, so we look at things like fully owned vehicles, business equipment. We'll do general UCC filings on businesses as well. And these are the items that can be used, and we do have Spanish-speaking staff as well for those entrepreneurs in our community who prefer working in Spanish. So we really do lend to startups, and for us a startup is a business in business for 12 months or less. We've helped businesses open the door and generate those first sales. And this is the sector breakdown since we've become an SBA microlender. This isn't prescriptive, but this gives you a sense of where we've been lending, who tends to come to us. No surprise, 29% in restaurant, food, and beverage. Those are the businesses that are the hardest to lend to. They're the highest risk, have the greatest failure rates. So we've developed a little bit of expertise in that area. We have loan committee members who run their own restaurants who can really look at these deals very carefully and provide both us as an organization and also that client a lot of ongoing support. Services, again, no surprise, that tends to be accountants, insurance agents, web designers, web consultants, childcare. In the green sector, we've done a little bit of lending, like to the green cleaning product company. We've also lent to some LEED certified architects who help people when they're remodeling their homes do so in a more energy efficient manner. We're also very keen to help existing businesses green themselves through energy saving upgrades and purchase of new equipment. Okay, there we go. So we've dispersed about $1.7 million, which doesn't sound like a lot, but when we first started, we were lending $2,500 as a loan maximum. So we have supported a number of businesses and have helped create and retain a number of jobs. Most of the businesses in our portfolio are grossing between $250,000, $500,000 a year. We have one business that made their first $1 million last year. So we are really looking at working with smaller businesses. So how can businesses in HVCFI and the iCAN New York network benefit from what we do? At first blush, I thought, I'm not so sure, because I think of green tech businesses as having a lot of startup costs, very high startup costs. But actually that might not indeed be the case, because as we were just speaking earlier, costs have really come down, and social networking and the internet have perhaps made it a little bit less expensive for many businesses to get going. But our loans aren't suited at that very early pre-development stage, when you're still kicking around the idea through the iCreate offering that iCAN New York offers. It's really once you've identified your funding needs and you're very confident that you're going to have a revenue stream coming in the short term, because we're unable to offer interest-only periods or payment holidays. So although we lend to startups, you have to really demonstrate that you have a revenue stream around the corner, because we'll take the first loan payment out almost as soon as the loan has closed. So that's something to think about. Again, startup financing, maybe you're already in business and you want to build a new website, do some marketing, buy a new piece of equipment. Those are the sorts of things that we can look at. We can also participate in deals with other lenders as long as the total deal size doesn't exceed $100,000. So that's something else to think about. The obvious, you need a business plan. The principal and effective owner of the business must be the person who's actually applying for the loan. We do see people who have credit issues, who might have a family member or a spouse be the owner of the business, but they're not really effectively taking decisions on the business. We would not lend in that situation. FICO above 550. Now this is where my banker friends will fall off their chairs, right? So we do consider 551 and up. But they do need to be current on all their existing debt, and they can't have more than $3,000 in write-offs, charge-offs, other things hanging around the credit report. And when we do see those issues, we want to know what's the plan for addressing them and bringing them down. Because our view is we want to help you become more creditworthy so that when you do apply to the bank, you have a 700 credit score and everything's very clean. This is pretty standard in terms of what we request. I think most lenders ask for perhaps a couple more years of tax returns. And this is our process. So we as an entity do all the loan intakes, the loan processing, the underwriting, the loan closing, and the loan servicing. So that client will always be working with us. We don't sell the loans on to another entity. So, so in that sense, we have a very strong relationship to every applicant and every business owner that we support. We stick to a very tight application deadline. We expect application packages to be in at the beginning of the month for a decision by the end of that same month. So we work very hard ourselves, and we work the business owner very hard to try and keep to that timetable, because we believe it is important to try and move things in a 4-week fashion if we can, because many people are anxious to get started and anxious to know where they stand. Requests under $10,000, we accept on a rolling basis and can turn them around in about 2 weeks. One of the main reasons that even we decline comes back to creditworthiness. Financial capacity is a big issue. We often then refer people back to people like HVCFI for ongoing technical assistance, or the small business development centers, or SCORE, so they can relook at their plan, at how they can increase their capacity to repay the loan. These are just a sample of businesses we've supported recently. We have worked with a high-tech marketing firm, but you'll see we've got ethnic groceries, food bakers, children's play spaces, catering facilities, counseling, greeting card, vodka. We do have a wine store as well in our portfolio. Tree services, they're doing very well in the last couple of years, unfortunately. I mean, fortunately for them, but not so fortunate for the rest of us who have trees falling on our homes. Home improvement businesses, these tend to be smaller shops, not large construction companies. Insurance agents, eyelash extensions. Has anyone heard of getting eyelash extensions? This is a really hot growing sector in the market for proms, for weddings. So we were very excited actually when this came to us and we got to underwrite this loan. So you see, yeah, hair maybe not. Eyelashes though, there's great opportunity in eyelash extensions. So you see, we see a lot of variety when we work on loans. I just want to thank you. I've left brochures on everyone's desks. I do want to say too, more than half of our loan clients are women, so coming back to the point about women and entrepreneurship and access to capital, we work very hard to make sure people who traditionally don't have access to lending get loans from us. And also more than half of our clients are from ethnic minority groups. So thank you, Les.
Excellent, thank you.